And there you go. Good morning and welcome to North Palm Beach. There you go. You're looking at the Intracoastal. You go out there and you go right down to Palm Beach. You go straight across through those buildings and you're out at the Atlantic Ocean. Good morning. Today is Thursday, December 8th. And I am Kenny Polcari, your host of the party. And what's happening today? Well, look, the sky is a little bit cloudy. It feels gray up there. It's not raining, it's not humid, but it just feels gray. And maybe that's indicative of more grayness and cloudiness to come to the markets. So let's talk about it. What is it that you need to know? Well, the market continues to churn, right? Stocks did close lower. The midterms are officially over. Suddenly, the administration is acknowledging that maybe we do have an inflation problem, right? They could say it now that the midterms are over. Mortgage apps fell again, right? Even with mortgage rates coming in a little bit than they did last week, right? There's no eco data today to speak of, but tomorrow brings us the all-important PPI. It's a big week next week for the central banks, the Fed, the ECB, the Bank of England, as well as more economic data. And oil tests $72 a barrel while Joey defends that position. And what are we having tonight? Well, the third recipe in the Christmas Eve recipes of fish. It is the Feta Shrimp, and we'll get to that in a moment. So stocks moved lower again yesterday, right? Actually, the Dow closed flat, up 2 points, really. The S&P lost 7, the NASDAQ down 57, the Russell gave back 6, and the transports lost 130. Investors continuing to worry about the stronger eco data, the stubborn inflation that's going to cause the Fed to push rates higher and then expect them to hold them there longer than they expected, and then toss in this last-minute spending deal that the Dems are trying to push through Congress before the new year begins, and they lose control of the House, right? And that just gives investors and the markets a little bit more angst. On top of the angst that we're already feeling, right, as we move into the end of the year. Now, look, now that the election is finally over, right, Georgia now voted to keep Raphael Warnock. Okay, great. So the Dems are in control of the Senate. It's easier now for Joey and the administration to admit that the transitory inflation argument is not transitory, and in fact, it's here to stay and not going away anytime soon. In a statement yesterday, Joey acknowledged that it's going to take a long time to tame inflation, and we can all expect hiccups along the way. But the economy is strong and we can do this, blah, 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 right? At this point, he's got nothing to lose by saying it. The next election is 2 years away, and so much can happen between now and then. Hopefully now, the National Bureau of Economic Research, the NBER, will finally call the recession for what it is, a recession. And when they do call it, maybe that will be the bottom because the market is forward-looking, right? Remember that. And it's already pricing in a recession, right? Have you noticed the performance, right? The Dow down 8% year-to-date. The S&P down 18%. NASDAQ down 30%. The Russell's down 20%. And the transports have given back 16%. Now, remember, they were all lower earlier in the fall. They've recovered a little bit, but they remain in this anxious territory. The chatter has now turned from buy the dip to sell any rally that happens. And what that means is that PM and asset managers are expecting lower prices in the months ahead, right? Think recession, and those lower prices are all about the recession, right? That we don't have until we do have it when they finally declare it in sometime in 2023. Goldie and Morgan Stanley, as you know, are still calling for the S&P to trade down another 20% from here before this is over. Jamie Dimon, right, JP Morgan CEO, told us that he thinks we could maybe have a recession next year or maybe not, sitting right on the fence, right? We've heard from many other CEOs that are calling for caution. We've seen layoff announcements hit the tape, and we're seeing even more earnings revisions revising lower into next year. And while I think there is some downside left to the markets before this is over, I'm not in that 20% camp. I mean, it could be, I guess, if the data suddenly turns so much weaker, so much faster than they expect. But I'm in the camp that we might have probably another 10% to the downside, which takes us to the September-October kind of low around 3,600. Realizing that on that one day in October, we did trade down to 3,450, but I thought that was kind of a flash in the pan, a little bit overdone. So I'm going with the 3,600 as kind of the low, but we might test it and churn there and test it and churn there before this is over. In the end, the recent bounce is a bit overdone, if the recession is coming, because when it officially hits, inflation is still going to be well above the 2% target, and the Fed will not be able to cut rates, which leads me to think that the Fed's going to start to change the narrative. They're going to start to revise the target from 2% to maybe 3% or even 4% if they can't get inflation lower, right? In any event, it's going to be that lack of clarity that's going to continue to cause the volatility. And the truth is, the Fed really can't be any clearer than they've been, right? I will say they have been trying to be clear, but they can't be so clear because we're in uncharted territory. They don't know what the reaction is going to be, but nor does anybody else. We kept rates for way too low for way too long. We bought way too many bonds, and we inflated the Fed's balance sheet, and now we have to figure out how to get out of this without bringing down the house. And since we've never been here before, there's nothing in the history books to guide us, to give us any clue on kind of what happens if, and what if we do this, and what if we tweak that. There's no guidance, right? There's no history for guidance. Treasury prices yesterday rose, sending yields a bit lower, leaving the curve still inverted across all the time frames. In fact, the 2-year is now yielding 4.24%, while the 10-year is yielding 3.46. That's a widening of the curve by about 80 basis points, suggesting a larger slowdown, contraction in growth in the economy, but no relief by the Fed. Recall earlier in the fall, the 2s and 10s came within a 25 basis point spread, and that was when the economy was expected to weather the storm, and the speculation was that the Fed was going to slow down and pivot. Well, as of yesterday, the spread has widened, right, 80 plus basis points, and that suggests that the economy will slow down more than expected, but the Fed is not going to pivot, right, Kavish? And so therefore, you have the widening of that curve in an inverted fashion. Tomorrow's eco data is going to be the next real test, right? The next real data point to consider. It's the PPI, the Producer Price Index, and expectations call for the PPI final demand year over year to be 7.2%, down from 8%. Rah, that's great. And ex-food and energy of 5.9, down from 6.7. Again, that's great. These would be significant moves lower, which will or should maybe negate some of the negativity. Then on the 13th, next week, we're going to get the latest CPI, and that's also expected to move lower. Both of these are directly going to be reported in front of the next Fed announcement, which is Wednesday the 14th, where the market expects a 50 basis point hike, right? We all expect it. If we don't get it now, I mean, we've all been living somewhere else because they've been all but telling us, right? But the real news is, what do investors think now? Are we still talking about a 50 basis point hike in January? Yes. 25 basis point hike in March? Yes. Then what happens after? We will have to wait until we get more data into the new year. Oil's gotten absolutely blasted this week. All that talk of demand destruction sent oil down 12% to end the day yesterday at $72 a barrel. We have now broken the September low of $74, and we've created 3 significant lower highs and lower low patterns since the June high of $107, which suggests more weakness ahead. U.S. inventories and production unexpectedly rose on Wednesday. The EIA, the Energy Information Administration, reporting that production rose to 12.2 million barrels per day, the highest level since August. Add in the recent U.S.-Venezuela deal that allows Chevron to produce more oil in that country, only adds to the supply chain, while a reopening of China only adds to the demand story. My gut tells me that the increase in inventory is not because of demand destruction, but rather supply increases. In any event, oil is now down 22% from the November high, and at that level, the U.S. is committed to buy oil to refill the SPR. Remember, Joey pasted an open buy order on his head, announcing to the world that at $72, he was ready to buy oil. So that's going to put a floor under oil, at least it should. Now, remember, the Saudis and OPEC don't want to see oil trading below $80 a barrel. But now that Joey has released the Saudi crown prince from any responsibility surrounding the death of journalist Khashoggi, maybe they're going to reconsider their stance. We are now at levels last seen in the fall of 2021. So we should find some support here and with resistance now at the short-term trend line of 83.25. So I think we're in this $72, $83 kind of trading range for now. This morning, U.S. futures are slightly higher at 4:30. When I wrote this at 4:30 this morning, the Dow futures were up 40, S&P's up 7, NASDAQ was up 35, the Russell was up 4. And I still think even now at 7:30, they're still slightly higher. There is no economic data today to speak of, so the focus is going to be on tomorrow's PPI and next week's CPI and the Fed meeting. We're also going to hear from the Bank of England and the ECB next week as well, so it's going to be a big week for central banks. it'll be the last hurrah before the end of the year, because after next week, we're into the last 2 weeks of the year and not a whole lot happens. European markets are mixed. Investors there remain anxious over the EU economy and the rates of inflation there. At 4:30 this morning, European markets were all trading between down 0.2% and up 0.1%. So there was no real movement as they continue to churn. The S&P closed last night at 39.33 after trading down and through the key trend line support that I identified on Tuesday, 39.30. Right? We traded as low as 39.22, but then rallied back. On Tuesday, remember, I told you to keep your eyes on 39.30, which I expected to be tested, and it was. Now the question is, does it hold, or are we about to test it again? A failure to hold will cause the algos to immediately go into sell mode and test 38.29 on the S&P, right? That's the next trend line. I expect more churn until next week, and then we could see the Santa rally take us back to 3,900, 4,000 range, maybe 4,000, 4,100. But remember, the tone now is sell any rally versus buy any dip, to which I think is going to keep a lid on the S&P. At least for now, right? And then you know me, in 2023, I think there's going to be more volatility in the first 6 months. So what are we having for dinner? This is the third recipe in the Christmas Eve fish dishes, and it's Feta Shrimp. Now, Feta Shrimp, it's easy, right? You can serve it a number of ways. You can put it in a large bowl with lots of toasted garlic bread, or you can put it over pasta, or like an orecchiette, a small pasta, or you could even put it over white rice, depending on how you want it. I leave it just in the bowl with the garlic bread. Now, for this, you need 2 pounds of large, cleaned, and deveined shrimp, right? You need sliced garlic, a lot of that. You need thin sliced plum tomatoes, feta cheese, butter, salt and pepper, olive oil, and Madeira wine. Right? You can prepare all this ahead of time, place it in the bowls, and get it ready for when you need to cook it. Because the thing about this dish is you really have to make it and serve it right away. You can't make this the day before and then heat it up again. It just doesn't come out right. You need to make it and eat it when you need it. So you're going to begin by heating up a half a stick of the butter, a little bit of olive oil on medium heat in a big saute pan. Add a handful of the sliced garlic and saute that garlic in that butter and oil for 4 minutes or so. Don't burn it, right? Now, next add enough shrimp so that you cover the bottom of the pan, but you don't want to pile them up, right, on top of each other. You want them all to be able to sit on the bottom of the pan. When they turn pink on the one side, you're going to flip them right over. Now, when you flip them over, you're going to add just enough Madeira wine to bathe the shrimp. You don't want to drown or cover them in the wine. You want them just to bathe. Turn the heat up to high. Season it with salt and pepper. Place the sliced plum tomatoes all over the top of the shrimp, and then take the feta cheese and crumple it all over the tomatoes, and then cover it with a cover and let it steam and to soften not only the tomatoes but the cheese, right? No more than 3 or 4 minutes max. Remove now and place it in a large serving bowl. Repeat this process until you've cooked all of the shrimp. When you're serving it, make sure that you have enough garlic bread on the table next to the big bowl for all the guests, depending on how many guests you have. Now look, if you're putting this over pasta, then you want to boil the pasta, strain it, mix it, adding extra feta cheese to the hot pasta to help to make it a little bit more creamy and delicious. And I would use a small pasta like an orecchiette, right? Those little baby ears. Don't use a long pasta, don't use spaghetti or linguine, don't use a rigatoni or a penne. You could use a farfalle, maybe a baby farfalle. You could use the orecchiette, is the best. And then if you're going to do it over white rice, just make white rice and you can serve it over white rice. But I think if you have a choice and you're going to put it over something, I would put it over the pasta. Now, in any event, you can see the sun kind of starting to peek out here. It wants to break through those clouds and maybe clear it all up, but we'll see. In any event, have a great day. Until tomorrow, take good care.